The best time to buy real estate was 5 years ago. The second best time is now. It is pretty much the oldest cliche in the book.
It really is.
Yeah.
But when a company with the sheer scale of Aldar,
Uh-huh.
I mean, we're talking a massive UAE giant here, when they decide to take that cliche literally and pour billions into the UK market right now, you definitely have to pay attention.
Exactly. So welcome back to the deep dive. Today, we are unpacking a November 2025 report detailing this massive surge of UAE capital flowing into London real estate.
And our mission for you today isn't just to track the money. It is to understand why the smart money is betting on British bricks in this specific economic climate.
Right, and what they are actually building. Because it is not just glass towers anymore, which is the first big takeaway here. The narrative has completely shifted.
Yeah, usually when we talk about foreign investment in London, you picture, empty safety deposit boxes in the sky.
Those super prime penthouses in Knightsbridge that no one actually lives in?
Right, but this report highlights the acquisition of London Square by Aldar. And for context, Aldar has a net worth of roughly £13 billion.
Which is staggering. And they bought a mid-sized UK developer, which signals they aren't just buying up assets, they are buying the actual infrastructure to build.
That is the key distinction. Experts are calling this a long-term commitment. And if you look at the inventory they are targeting, it is incredibly diverse.
You do have the requisite £18 million penthouses in Westminster, sure.
But they are also developing sites in Croydon. And those price points start at £325,000.
It is a portfolio that targets the whole board, not just the elite. They are looking at Tottenham, Richmond, Twickenham, basically betting on the actual housing market.
Which brings us to arguably the most interesting part of their strategy, this idea of historic regeneration. This isn't just slapping a new facade on an old office block.
No, the Surrey County Hall project is the standout example of this. It is a Grade 2 listed building. And the detail that really caught my eye?
The prison cells.
Yes. They aren't getting the history, they are totally leaning into it. They are converting former courtrooms and actual prison cells into residential spaces.
It is a fascinating pivot in utility. You are seeing this cool factor attached to Victorian institutional buildings. People want to live as a landmark.
Even if that landmark used to be a place you definitely did not want to end up in.
Right, but if the view is right, the history just adds character. And the report notes these high-end developments are prioritizing those classic London postcard views.
Big Ben, the Thames, the London Eye. But let's get into the investment logic for a second. Why the UK, and why right now?
Well, investment advisor Ola Akinbo breaks this down in the report. It is not about aggressive overnight growth.
Yeah.
It is about the legal framework.
Strong governance, a stable legal system, world-class education.
Exactly. But he drops a statistic that really stops you in your tracks. Historically, capital appreciation in London has doubled every decade since the 1950s.
Doubling every decade. I mean, if you were sitting on capital in a volatile emerging market, London functions almost like a high-yield savings account that you can live in.
Precisely. And the market is surprisingly accessible to international buyers. The report uses the Nigerian market as a specific case study for this.
Right, noting that foreign investors can access mortgages up to 85% of the property value or enter via joint ownership structures.
However, Akinbo does issue a very specific warning about the type of investment. He flags off-plan buying.
That is, purchasing before it is built, right?
Yeah, buying before the physical building is finished. He flags that as a potential trap if you have the wrong mindset.
Because in some developing markets, buying off-plan is a flipping strategy. You buy low, the building goes up, the value spikes, and you sell.
But in the UK, that quick spike rarely happens like that anymore. It is all about long-term rental yields now. It is a 10 to 20-year horizon.
So if you try to flip a UK off-plan property in 6 months, you will likely get burned.
Especially when you factor in the regulatory landscape.
Right, you cannot just be a ghost landlord. You need to register with HMRC, navigate the tax implications. It requires active compliance from you.
So if you are looking to enter the market, where does the data say the gross actually is?
You follow the transport links. The smart money is moving away from Zone 1 and looking at the Elizabeth Line corridor and Zones 2 and 3.
That is where the infrastructure is driving the value up, rather than just the prestige of the zip code.
So to synthesize what we have learned today for you, we have a massive influx of UAE capital, but it has shifted from buying trophies to buying development infrastructure.
The strategy is a long-term hold, targeting stable appreciation that historically doubles every decade. And the geography is shifting outward along the new transport lines.
It is a really compelling picture of a market that is evolving, not just growing. But I want to leave you with a thought on that Surrey County Hall project we mentioned earlier.
The prison conversion.
Yeah, we are seeing courts and prisons, literal symbols of state power and punishment, converted into luxury living spaces. How does repurposing these specific buildings change the memory of a city? Is it erasing the past or domesticating it?
That is definitely something to think about next time you walk past a historic building.
Thanks for listening to this deep dive. We will see you next time.